Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the mountain of corporate jargon and financial mumbo jumbo for you this week. We're diving into a filing from Kurv ETF Trust, and let me tell you there are a lot of ETFs in here, so buckle up. Did you appreciate these insights? Please hit that like button and make sure you subscribe so you don't miss future videos. We also have a new Discord community linked in the description below where we break down more complex financial documents and discuss them. So check that out. Alright, so this is a semi-annual shareholder report for several ETFs under the Kurv ETF Trust, and they've given us a whole bunch of financial details to chew on. What we really want to do is find the story in these numbers and see what they tell us about the health and direction of these investment vehicles. First up, let's look at the Kurv Gold Enhanced Income ETF, also known as KGLD. This fund is all about gold and income, and as of November 2025, it had about $37 million in net assets. That means investors put in $37 million into this fund. Now let's talk about what they invested in. It's heavily weighted towards us, Treasury bills making up over 73% of its investments. That means it's holding a lot of government debt. Interestingly, it also holds about 25.8% in purchased options. This means it bought the right to buy or sell certain assets at a set price. This is a more complex strategy aiming to enhance income or returns. Next, we have the Kurv High Income ETF, or KILD. This one had about $14 million in net assets as of November 2025. What stands out here is the top issuers list a big chunk is in common stocks like Teradyne Inc. Global X Silver Miners ETF and Vanet Gold Miners ETF. This tells us it's not just about bonds, but also companies involved in mining and technology. It also has a significant allocation to manufacturing at nearly 40% and information technology at over 14%. This ETF seems to be a mix of income generation and growth sector exposure. Then there is the Kurv Silver Enhanced Income ETF. KSLV, it had $24.9 million in assets on the 30th of November 2025. Like the gold ETF, this one is also heavily invested in US Treasury bills at 69.1%, but it also puts a substantial 28.8% into the iShares Silver. Trust this is a pretty straightforward bet on silver prices, while the Treasury bills provide a safety net. Now for something different, the Kurv Technology Titans Select ETF, or KQQ. This fund had a much larger $68.4 million in net assets. This ETF is heavily invested in common stocks with nearly 70% of its assets in this category. The top holdings are big tech names like Alphabet Inc. Amazon.com Incorporated, Apple Incorporated, and Broadcom Incorporated. And Broadcom Incorporated, this is clearly a bet on the continued growth of major tech companies. Interestingly, the report also shows 26.6% in US Treasury bills. This suggests a strategy of holding tech stocks for growth but using government bonds to potentially reduce volatility or provide some income. Moving on to the Yield Premium Strategy ETFs. These are a bit more niche. For example, the Kurv Yield Premium Strategy Amazon AMZN ETF, or AMZP, had $13.2 million in net assets. This fund strategy appears to be mostly US Treasury bills at 93.6%, with just a small portion in Amazon.com Incorporated. And some other investments, this looks like a strategy focused on generating income primarily through safe assets while having a small exposure to a specific company's performance. We see a similar pattern with the Kurv Yield Premium Strategy Apple AAPL ETF, or AAP. It had $5.1 million in assets. Again, US Treasury bills dominate at 80.4%, with a small allocation to Apple Incorporated. This tells us these yield premium ETFs are structured to be very conservative with their core holdings focused on treasuries and then adding a bit of exposure to a specific company's stock. The Google ETF, or GOOP, had $13.5 million in assets. And guess what? US Treasury bills make up 78.4% of its portfolio, with Alphabet Incorporated being the only other significant holding at 22.6%. It seems the strategy for these yield premium ETFs is very consistent across the board, prioritizing safety with treasuries. The Kurv Yield Premium Strategy Microsoft MSFT ETF, or MSI, had $6.8 million in net assets. Here, Treasury bills are at a whopping 102.4%. This is interesting. It means the fund has leveraged its treasury holdings or made some other complex moves to have more treasury exposure than its net assets. This also includes a small slice of Microsoft Incorporated. It really highlights how these ETFs are trying to generate yield. D, with a very conservative base. Next up, the Netflix NFLX ETF or NFLP with $9.5 million in assets. US Treasury bills again are the main component at 101.5%, with Netflix incorporated as the only other holding at a negative 2.3%. This negative percentage for Netflix suggests a strategy possibly involving options or shorting to hedge or generate income. Finally, the Tesla ETF or TSLP had $21.8 million in assets. And you guessed it, US Treasury bills form the core at 89.1%, with Tesla incorporated at 8.2%. This confirms the pattern an ETF focused on a single company while heavily leaning on safe government debt for its primary strategy. Now let's dive into some of the nitty-gritty financial tables. These are where the real story lies for KGLD, for example. We see purchased options making up 25.8% of its investments. This means it is actively buying options to potentially boost returns or manage risk. Interestingly, for the KGLD fund, we see a schedule of written options. This means the fund is selling options, giving others the right to buy or sell assets. From the fund, this is a common strategy to generate income from premiums. One thing to note across many of these ETFs is that their portfolio turnover rate is listed as 0%. This means the fund is holding onto its investments for a long time, so it is not actively trading in and out of positions frequently, which can be good for reducing transaction costs. The expense ratios are also quite important for the Kurv Gold Enhanced Income ETF. It is 1.35%. This is not insignificant for the Kurv High Income ETF. The expense ratio is 0.99%. And for Kurv Silver Enhanced Income ETF, it is 1.24%. These numbers tell you how much of your investment is going towards. Managing the fund each year, the Curve Technology Titans Select ETF has a lower expense ratio of 1.14%, but it also has a portfolio turnover of 18%, suggesting more active management compared to the other ETFs. So while its expenses are slightly higher, it might be doing more trading for its investors. Looking at the investment breakdown for the Curve High Income ETF, it is quite diversified with holdings in common stocks, exchange-traded funds, even some purchased options and US Treasury bills. This reflects a strategy of trying to capture income from various sources while managing risk with the Treasury bills. What is really striking is how many of these ETFs have a significant portion of their net assets in Treasury bills. This suggests a very conservative approach to managing investor money, with a strong emphasis on capital preservation and income generation through safe assets, even for ETFs with income or yield in their names. The yield premium strategy ETFs, like the one for Amazon or AMZP, are almost entirely US Treasury bills, with a small percentage in the company's stock. This indicates these funds are primarily designed to offer very conservative exposure, with a small kicker from the underlying stock. Now for my take on all of this, you're seeing is a clear strategy from Kurv ETF Trust. Many of these ETFs are heavily reliant on US Treasury bills. As their core holding, this means they are prioritizing capital preservation and generating a baseline level of income through very safe assets. However, for funds like the yield premium ETFs, the exposure to individual stocks like Amazon, Apple, Google, Microsoft, Netflix, and Tesla is quite small. This implies that the premium or yield they're aiming for likely comes more from complex option strategies rather than aggressive stock picks. The high percentage in purchased and written options across several ETFs also signals a more active and potentially more complex risk management. An income generation strategy, these ETFs are not just passively tracking an index, they are actively trading options to try and achieve their objectives. However, options trading can be risky, and it means the performance can be more volatile than a simple buy. And hold strategy, this is especially true when only a small portion of the ETF is invested in the underlying stock itself, as seen in the yield premium ETFs. The expense ratios are something to keep an eye on. While some are relatively reasonable, others are on the higher side, especially for ETFs that are heavily weighted in low cost Treasury bills. It is important for investors to understand what they are paying for. In conclusion, Kurv ETF Trust offers a range of ETFs with varying strategies, but a common theme is the significant use of US Treasury bills for safety and income. Some ETFs, like the Technology Titans one, are more aggressively invasive. TED in stocks, while the yield premium ones are using options on top of that conservative Treasury base. The key takeaway is to understand the underlying strategy, particularly the role of options, and how that impacts risk and potential reward. What do you think about these ETFs and their strategies? Let us know in the comments below. If you found this deep dive helpful, please hit that like button and subscribe for more, and make sure you join our Discord community linked in the description for more live discussions and analysis. Thanks for watching. See you next time.